Are you a football fan? Have you ever found yourself wondering, what in the world was that ref thinking? Well, Mike D, the referee, is here to help you. Join me on Whistle Talk as I talk to professionals on the field and in the booth to help you understand what is going on inside the mind of a football official. Ladies and gentlemen, welcome back to another episode of Whistle Talk. Mike D, the referee, joining you here for the first time in 2026. First time. It's been a rough beginning of my year this year between the holidays, and then last week I got pneumonia. So I do apologize to my loyal listeners out there. I didn't get a chance to backtrack anything or have anything pre-recorded due to the holidays, and dang, pneumonia crept up on me and kicked my butt for a couple of days. So I apologize if you hear me cough a couple of times tonight. I'm still kind of going through it, but feeling a lot better. But Happy New Year and welcome back to Season 3, Episode 1 of Whistle Talk. I'm very excited to get this rocking and rolling once again. And I think I got a pretty good guest that everybody's going to kind of appreciate tonight, which I'm going to introduce in a moment. But before I introduce our guests, once again, I'd like to thank everybody for starting Season 3 here with me. And again, if you are new to the show, please hit those like buttons, hit that subscribe button. Give a follow, give a thumbs up, give a thumbs down. Do what you got to do. Give those comments. Let's get the word out there of what us officials do in all sports, not just in the sport of football that I love to talk about, but we're going to be talking about officiating in general tonight, and you'll understand more when I dive in with the guest tonight. But hit those like, subscribe buttons. Hit me up if you have any emails or any questions. MikeDTheReferee@gmail.com. I'm always there to try to help out the best that I can. And make sure to spread the good word. And if you know of anybody who's interested in becoming an official, this is the time of year that we're looking for the football officials that the cadet classes typically are going to be starting. So hit up your local association, or again, hit me up. I'll steer you in the right direction. And if you know a veteran, take a look at Battlefields to Ballfields. Okay, go to their website, battlefieldstoballfields.org. Okay, great things that they got there for the veterans in the world with scholarships and funds like that to help get you off the ground and get you into the officiating world. So once again, you got all those different sites, and I'll have those links on my notes at the end of the episode. You'll be able to see them. So with that being said, let me introduce Jeff Conrad. Jeff coming to us from the what state are you in, Jeff? You're in Illinois, right?
Bartlett, Illinois, just
okay.
Outside Chicago.
I wanted to say that, but I had to backtrack to double check myself, because we were just talking pre-production. Jeff is an Indiana grad, and tonight of our recording, over my left shoulder, the U is up 3-0 over Ole Miss. So we were just kind of talking about the college football games going on, and Jeff being an Indiana grad, I was just making the comment that it's basketball season. What is Indiana doing in there? But all good stuff. But Jeff Conrad joining us from Illinois. Jeff, how you doing? Happy New Year, bud.
Happy New Year. Good to see you.
So, Jeff, I'm going to kind of just hand it over to you and let you introduce yourself and let you kind of, if you want to mention the topic that we're going to be talking about, something that is always near and dear to my heart, money. So, Jeff, what brings you here tonight?
Sure. So, in addition to officiating, my day job, I am both a CPA and an attorney. Made the decision many years ago to practice in the public accounting side of the world. I've been a tax partner for 12 years at the firm that I'm at, and I practice mainly with individuals, high net worth family groups, and also closely held businesses.
All right. Well, if you want to give a plug to your firms, by all means, speak it out loud if you want, or I don't know if you're allowed to, but by all means, plug away.
Oh, sure. We're we're very proud of our firm and our culture. We're FGMK. We're considered a large local firm in the Chicago market. We have approximately 200 people in our tax practice, which for a large local firm is a very large practice. And we also have a number of other practices, including audit, forensics, mergers and acquisitions. So we're a full service CPA firm.
Good stuff. So the reason that I asked Jeff to come on this show tonight is because of the new year rolling around. We're rolling right into tax season. And I know as officials, we're always sitting there. I know I've had the conversation a number of times with my crew. If I'm a guest on different crews, it always seems to pop up at least once or twice a season about what the heck do we do as officials? Are we subcontractors? Are we, and I have in here quotes, hobby money? So there's a lot of different questions that I know a lot of people may have, myself included, about how we approach what we're going to do filing for our taxes. Like you said, I'm going to say 90% of us all have day jobs, the full-time jobs, and the officiating is quote unquote hobby. It's what we do out of love for the majority. It's not typically something that we're doing to get rich off of becoming a high school football official. But it is something that we can make a decent amount of money in. But when you're making money, the government wants to know what's all going on with that. So,
Yes, they do.
So, Jeff, where do we start? Like, what's the best way for us officials to start thinking when it comes to tax season?
Well, a few things come to mind there. One is you start with really where the IRS starts when they start looking at a tax return. One, they start with if you receive cash, it's income, unless you can explain why it's not. One of the common myths I've heard out there is that, well, if I don't get a 1099, I don't report it as income. Well, it's not quite that simple. What's an interesting development more recently is in the 1099 world is we have a lot of school districts that are starting to issue 1099s to officials, or a 1099 NEC, which is a 1099 for non-employee compensation,
Okay.
meaning that you got paid from a school district. What I've also noticed, though, is Arbiter wants to issue the same 1099s for the same dollars, which is going to create some really interesting situations. I think it's too early for that to have come up really in an audit, but when you have two 1099s for the same dollars, it's going to eventually turn into an issue. What you have to know, though, about the IRS is when they receive those 1099s, understand what a 1099 is. It's a report to the IRS that the school district paid you money. Mm-hmm. That's all it is. Is it income? Is it not? The 1099 doesn't determine that. It's simply a factual report that you were paid money.
Okay.
It's up to you to report that on your tax return. Now, the difficulty that you have with the IRS computer systems being further developed, and they've got better programs now, is they will take those 1099s and they will match them to the tax return. So what does that mean? That means that someplace on the tax return, they're going to be they being the IRS, mm-hmm. are going to be looking for that 1099 income to be reported.
Okay.
If you don't report it on the tax return, or they can't find it anywhere, that's when you're going to get a pen pal at the IRS, and you're going to get a letter asking you to explain where it's at.
Ah. So now, with that, and I know a lot of it, and this, I'm kind of throwing this one at you. I know a lot of youth games are paying right out of a concession stand where they are going to give you cash. How would that fall in the gray area of the world, or should we just not even talk about that one? Is that one out of sight, out of mind type of scenario?
Out of sight, out of mind, but
Gotcha.
could be questioned during an audit, so you have to be aware of it.
Okay. So yeah, I know a lot of people, and the term is always cash is king. So I know with a lot of the youth games, they are paying because they don't have. Some places might not have a treasurer, and they're just going off the cuff at times. So I know the school districts are going to be a lot more stable in that aspect and knowing where the money is going and things like that. But it's those youth games where some places cut you a check, some places give you cash, and
Yeah. I will tell you, I prepare not-for-profit tax returns for 2 youth leagues, and the IRS is starting to catch up to them too. So it's not going to be very long before 1099s might have to be issued there. The 1099 reporting thresholds are changing too. So just things to be aware of. Keeping track of the income and reporting it. That's really where you want to get to. You just want to get you want to get something on the returns.
Okay.
You want to get something on your tax return.
So I guess then my first real question is how does the IRS look at us as officials? Are we? You said the NEC or N.
1099 NEC, so
The
not
NEC.
employee compensation, right? So you're viewed as a small business.
Okay.
Most of us would report this as a Schedule C on their personal income tax return, which is just a small business. You would of course report all of the income, but that doesn't mean you have taxable income because you also have expenses that you can deduct against that income.
Okay. So now with that, I know I'm a school teacher and I can do football games in my school district. I can't do it for the school that I teach at, but my school district is 6 high schools. So if I work one of those games, that check doesn't get cut. That check goes to my regular payroll account, where if I work a different school, now I would get that NEC type of check where I'm not an employee for that district. So for me, is there any difference? Does the IRS even know that that extra income is coming from a district-wide game, or they're just looking at my overall income from the school district itself?
I know a number of people here in Illinois that work in school districts that also officiate. When they're paid by their own school district, that's of course they're an employee in that regard, and it's handled as part of the normal payroll. So that's going to show up, in your W-2 for wages, and you'll report that income there.
Okay.
So that the income from that portion of your officiating is going to come through the W-2. The balance of it would come through the 1099s.
Now, at what point do you have to? I'm trying to think of how I should word this, but at what point do you have to pay taxes on income coming from a particular school district that it's not your school district that you work at, but you work multiple games at that school? And say you work with sub-varsity games, you're working 7 games, and you're probably making $500 over 7 games, 7 sub-varsity games. Is that something that you have to file or hold out taxes for, or is there a threshold in which, or is that state to state?
No, there's no state-to-state difference. So it's income. So there's no de minimis threshold. All of your game fees are income, so that would be your revenue reported on your Schedule C business, and then you would deduct the expenses against it. There's really no threshold to it.
Okay.
You should report everything. I mean, that's one of the basic premises that the tax code starts with is every individual is cash basis taxpayer. And what does that mean? It's very simple. If you receive cash, it's income.
Okay. Now, I was always under the impression that I needed to earn, I want to say, I'm thinking it's $600 until I would have to then pay taxes on that income. Am I incorrect in thinking that?
Well, so the $600 threshold goes back again to the 1099s.
Okay.
And that's a de minimis threshold. Once you cross that, the district has to issue the 1099 to
Has
you.
to.
Whether it's above or below $600, it's still taxable income. It's
Okay.
just whether the district has a reporting obligation to file that 1099 with the IRS.
Okay, because that was always something that was with our school district, in my school district, because I was making more than the $600. That's why it was going to my regular paycheck.
Well, and it was going to your regular paycheck because it's part of your wages and it's probably part of also, it's negotiated into your district's collective bargaining agreement.
Yeah, I don't know about that one with my district.
Probably there someplace
Yeah.
in the fine print.
All right, so we got our 1099 NEC. I'm a layperson. I'm sitting down. I've got QuickBooks or any of the online tax platforms that are out there, and I'm filling out my taxes, and I'm new to officiating. Where do I start plugging in my income for that you're saying with the 1099 for the people that are, well, like me? I'm completely
Yeah.
dumb to it.
Well, so what you do is you start with Schedule C. Schedule C is really a pretty straightforward schedule. It asks a few identifying questions at the top, and then you fill in how much income did you have. That's one of the first lines. And then the bigger part of Schedule C is actually what business expenses did you have that are deductible against that income. So we have a whole range of those expenses that we should consider.
Well, what do you got? Because I know that's
Well, let's just walk through them. Something that everyone's going to have, we're going to have licensing fees every year.
Yep.
We're going to have clinics. We're going to have travel. We're going to have meals and entertainment going to those clinics. So clinic costs, our travel going to and from the clinics.
So let me interrupt you here because I know in my previous episodes I always talk about it. After our games, myself and my crew, we like to go to a local watering hole and kind of talk about the game and have a couple of beers and some appetizers and stuff like that. Is that something that we can include into a write-off?
Yep. Yeah, absolutely.
Just start saving the receipts on those.
Save those receipts. That's meals and entertainment. Now, meals and entertainment is limited. It can be limited in some cases. So you might get a 50. You might only get to deduct half of it because, well, it's the tax code. So they get to write the rules.
Yeah. Kind of like referees, right?
Yeah, exactly. Exactly. But certainly the meals and any kind of meals, you can write those off. Of course, in Illinois here, we have tollways everywhere.
Jeff, did I tell you I'm from New Jersey?
Yeah.
What
so
exit?
I think you might have one or two toll roads out there. Yeah. You also, in some cases, for instance, on a game day, I might have to go to a client. And I can't get home before the game. I might have parking expenses. I could have, other expenses that are that come up are one of the big ones is equipment.
Mm-hmm.
Any equipment that you have related to the game, uniform, shoes. Socks, all the permutations of Under Armour that probably all of us own for various times of the year, and that equipment can extend to if you twist an ankle during the season, you need an ankle brace. You need any kind of athletic tape or anything like that. That whole range of equipment is all expenses related to your business, which is officiating. So all of that would be deductible.
So now you mentioned meals and entertainment. That would be a subcategory in the 1099 for the deductions. I would just
that's a specific line.
Okay. So then equipment would be another line. How would you what would you recommend a term for your licensing and for your clinics? Would that fall under education or?
That falls under normally training, either training or dues and subscriptions.
Okay. And then you mentioned the tolls and stuff like that. Now, so you got travel expenses that are going to go on there. Is mileage something that you can calculate?
Right, certainly. So mileage with your car is handled one of two ways. You can take a standard mileage deduction, which is I'm trying to think. It was 58 or 60 cents a mile last year. They publish a new rate every year.
Okay.
So they would have just published, the IRS would have just published a new mileage rate for 2026.
Okay.
There's a published rate for 2025. And what I do is I have a worksheet where I just keep a running log of, am I traveling down to Bloomington to the IHSA for a meeting? Am I traveling for a clinician meeting? Am I going to a clinic? Am I going to a game? Am I going to a playoff game? Anything along those lines. I'll keep a travel record of how many miles I've driven to and from, and I total up those miles at the end of the year, and then I include that in that's a deduction that's included in the return.
Okay.
The other way you can do it, but it's rather difficult, is instead of using the standard mileage rate, you can use actual expenses. So you can take a portion of your, you can depreciate your car. Mm-hmm. You have your car insurance, you have your gas, you have oil, repair and maintenance, your tires, any of those specific expenses. The difficulty with the actual expense method is you have to know business mileage and personal mileage. Yeah. And then you have to take that whole list of expenses and divide it up between the two.
Gotcha.
That's why the IRS offers the standard mileage rate, because the time and effort it takes to do actual is, in some cases it's justified to do that, but in many cases the standard mileage rate is going to be more. It's a simpler process, and the difference between the two doesn't justify the additional time and effort.
Okay. Now you mentioned before that certain scenarios you may be meeting with the client and then go from the client to the game that you're working. If I'm on a Friday night, if I'm working, I live an hour away from where my school is. So if I'm going from my school, instead of coming home and I'm going straight to the game venue, am I calculating the miles from home to the venue and then back home, or am I calculating it from work to the venue and then home? Is there a method, or?
Technically, I think you're supposed to go from the school to the school to the field to home.
Okay.
With the map programs today, do people just go from home to home? Yeah, some of them probably do.
Well, the reason that I'm asking it is because with our arbiter that we're using here in New Jersey, it actually has the mileage away from the school. It has my home address in there, and it shows how far each school is from right. where I live. So if I just went off of that, because 99% of the games are closer to my school, so I am traveling up there.
Right.
But if I use that, that would be something that would be okay.
That's it would take an IRA, it would take an audit, and then the person would have to say, well, where were you before every game?
Gotcha.
So keeping the most important point is keeping a log of dates and what you were doing related to officiating on those dates.
Okay.
I've gone through audits with officials as part of a larger income tax audit of their personal tax returns, and the difficult to defend deduction on audit when I don't have a list of where you went and why.
Okay. And a lot of times, hopefully like 99% of the times, these receipts and these logs that you're keeping are for the just-in-case scenario.
Sure.
It's just if they do come knocking or ring that doorbell or send you that snail mail, you have it to say, I've got you. But how often do people get audited? Is there a rough?
Well, with the number of IRS employees that are no longer there, the frequency of audits are going down significantly. The one thing you have to know, though, is that in addition to an auditor coming to you and saying, I want to review your records, You could also be subject to a desk audit where you get a letter and a person in the service center says, "I would like to see the following records," and they ask for you to send them to them.
Okay.
Now, I was told earlier today at a firm meeting that the IRS is currently has a backlog of 6 million documents that have been mailed to them that they need to review. So that desk audit's not going to happen anytime too quickly, but it could happen either way. I would say that a field audit is probably it's not going to happen very often. And I mean, I've seen it come up more so in the context of some other issue being audited, and they just decide to ask about it. They decide to ask about the officiating component.
So now, how long do you recommend holding on to those logs and those records for? Is it just until the following tax season, or do you recommend holding on to them for a number of years?
So let's just take 25 as an example, because we're about to start preparing 25 tax returns. So the 2025 tax returns we would file, presumably many of them by April of 2026, at the latest October of 26. I would go at a minimum 3 years from the end of October.
Okay.
The safe conservative route would be to double that and say keep them for 6 years. There actually is a provision where the IRS can audit more than 3 years after a return is filed, but they have to show that you've substantially understated income.
Okay.
But that's a reason to just keep the records for 6 years before you discard them.
Yeah, and a lot of times that's just a folder that you put down in your desk and forget about it until next tax season next year.
Right.
And with the technology, I mean, shoot, Google Forms and Sheets and all those other things that you have online, you can keep all the records on there and just go from there. And now heck, my iPhone, I could scan in receipts and have it saved as a document or a PDF. So you got all those things there. So what am I missing here? I know we're talking about keeping mileage logs, receipts. Is it something where having a separate, possibly bank account just for your football finances or your officiating finances, I should say, is recommended, or does that not matter?
Helpful, but not absolutely necessary.
Okay.
If the IRS ever wanted to audit your deposits into that account, certainly if you deposited them to one account, makes it much easier. Arbiter pay today we have a lot of arbiter pay in Illinois. That's actually really convenient, because if I ever need to know, if I ever say, wow, have I accounted for all of my game fees for the year, I can just pull up arbiter pay and see who paid me.
Yep.
So that's a helpful record to have. Two of the issues that come up somewhat frequently. One is self-employment tax, because you are an independent contractor, and really you are subject to self-employment tax. Now, whether or not that's an issue is going to depend on what other income you have. Because you pay the self-employment tax is in addition to the income tax.
Okay.
But it's 15.2%, so it's not a small number. But it only goes up to if you have W-2 income above the wage threshold, which I think is approximately $150,000.
Okay.
Then you're really not going to see it, because a big portion of the self-employment tax falls off after that. There's two components to self-employment tax, and one of those falls off, and it goes from 15% down to 3%. So,
all right.
Another issue that frequently I get asked about is hobby loss rules. So, the government has a strange. Here's how the government works. They say heads we win, tails you lose. Or in the tax world, if it's income, we get to tax it, and if it's a loss, you don't get to deduct it.
Yeah.
That's where they operate from. So it is possible that your expenses, when you start factoring in all of your mileage and all of your equipment expenses and everything like that, it is possible you could have a loss from officiating.
Yeah.
So you actually, now, does that mean you spent more money than you took in? Well, maybe, maybe not, because remember that standard mileage rate is, I don't think it's costing you 58 cents for 58 or 60 cents a mile when you multiply that out.
Yeah,
So
depending on what kind of gas guzzling car you have.
exactly. But if you do have a loss for a year, then you get to a different question. And that question is well, do I want to claim that loss on my tax return against other income I have and reduce my taxes? You can do that,
Okay.
but there is something called a hobby loss rule where at a certain threshold, if you have a loss year after year after year, the IRS will say, well, that was just a hobby. You really weren't in that, weren't involved in that activity for profit. So you don't have to report the income, but we're not going to let you have the losses either.
Gotcha.
So that's something that I've seen people bump into more than once, where they may either get a letter saying, well, we see the loss on Schedule C, we're just not going to allow you to take it.
Very interesting. Yeah, all this stuff is definitely new to me, and I got to keep this in mind. Now that I'm thinking of it, so I didn't keep great records this year.
Mm-hmm.
Can I go back and start calculating now for my 2025, the mileage, my income? A rough estimate. I know I bought a pair of pants and a new hat this year and a couple new whistles, and I know what the rough price of that is. If I don't over exaggerate and say that I spent $1,000 on equipment this year, if I spent $100 on equipment this year, is it okay for me to kind of go back and kind of backtrack myself?
Sure. Yeah, I think it is. And certainly this time of year is an appropriate time to also pull up that list of games. And, was there maybe an association meeting or a clinic that's not on the mileage log?
Mm-hmm.
Make sure you've got the entire list of games. Unfortunately, we do have some school districts here that are a bit antiquated in Illinois. They still send paper checks, and if you work a game there, you might get a paper check now and between the time now and before you retire. If you didn't get so make sure that you actually got the actual checks. It's a good time of year to go back and verify that information. Make sure that you've got all the game fees all squared away and what did you receive, and then review those expenses. Is there maybe a clinic on there or something that even an online subscription that you paid for that, maybe I don't have that on the list yet. Good time of year to go back and review those things as you start to think, okay, and we're going to start preparing tax returns here in the next few weeks.
Okay. What about officials that officiate multiple sports? So now they're for me, I'm a one season person. I just officiate football. I haven't gotten involved yet with other sports, but I know it's actually going to be one of my upcoming topics is talking with officials from multiple sports. If I'm paying to different associations, if I have different dues and stuff like that for different associations, a basketball association, a football association, would that all fall under the same subcategory that we were talking about of fees, or would I have to break those down and have a football specific one, have a basketball specific Schedule C form?
Well, so on Schedule C, if you wanted to have separate Schedule Cs, you could.
Okay.
Not necessary, though. In fact, a friend of mine that I actually prepare his tax return for other reasons, he is both a football and basketball official. He just gives me the two sports, if you will, broken down so that I can encapsulate the expenses and within each sport to know that we've got everything accounted for.
Okay.
But you can put all that on a single Schedule C.
Now, when it comes to all the equipment and stuff like that, is there anything with depreciation when it comes to like uniforms and stuff like that, or is it you can write it off when you purchase it new, as opposed to I bought it 2-3 years ago, and
Right.
how would that work?
You can either write it off directly as just a cost for the year. If you wanted to report it through depreciation, there are rules that allow you to take the entire expense in the year that you buy it.
Okay.
That's normally what people do.
Huh. This is all very interesting because I've heard about the depreciation and stuff like that, and I'm familiar with that, but I might just have to buy myself a new shirt every year and
Yeah.
keep it nice and fresh and clean. So different things like that. Um, so I know I got to be missing something. What are other questions that officials typically ask you about?
Occasionally I'll be asked, do I need to establish an LLC for my officiating? So LLC gets into an LLC from a tax standpoint. That's what's referred to as a single member or a single owner LLC is disregarded. It's referred to as a disregarded entity, and it's reported on Schedule C for income tax purposes. Okay. So whether or not you have a Schedule C really isn't a tax reporting issue. Limited liability companies offer some liability protection, which all of us are concerned with liability protection.
Absolutely.
I don't know that the LLC is going to offer a huge amount of liability protection, and that's very a state-centric question, because LLCs, and depending on what state you set the LLC up in and which state you operate in, the rules are going to be different,
Okay.
and the liability rules are going to be different as well. I would say that time is better spent there making sure that your licenses. So I'm licensed with the IHSA. I know that we have liability insurance through our IHSA license. I know NASA's got some liability insurance if you license with them or if you join their association. I would say if you're looking at liability protection, you're looking at Federation, NASA, or your state association to see what liability protection is offered there, more so than concerning yourself with establishing an LLC with a particular state and then having to pay to maintain it every year, because there are some fees to keep an LLC
Yep.
in place every year.
So now, and you're mentioning that different states are going to be different. With all the things that we've talked about when it comes to the equipment, the meals and entertainment, things like that, is that just something that you file on your federal return, or is that something that you also file on your state tax return?
Right. Well, so this is what I'm talking about primarily is the federal income tax return. Now, states could have different rules, so because the states get to write their own income tax laws. And so I think we have 50 states, and we have 47 or 48 income tax laws. We have a couple of states that don't have an income tax, so
which I found is where all the professional players want to go play.
Exactly, exactly. Now, many states, though, the income and deductions related to officiating in this and in a business, those are all factored into how they calculate state income tax. For instance, Illinois, the starting point for an Illinois calculation is federal adjusted gross income tax, which is just a line item on the federal income tax return.
Okay.
Which is after all of the income and expenses from officiating.
Gotcha.
So I suppose there could be a state that said, well, we're going to adjust expenses related to a business here and there, but those would be very state specific, and I don't know that there are that many of them.
Okay. What about? I'm just trying to think of how to kind of go over like gray areas. I know people are, and again, this is going to come out wrong, but some people try to manipulate the numbers to their benefit and stuff like that. So what are some gray areas that we should avoid and like not even that's going to raise a red flag right away and have an audit coming at us?
Well, two that come to mind. One, be reasonable with your, if you take standard mileage, don't tell the IRS you drove 100,000 miles in a year. That's gonna trigger a notice, or that's gonna trigger some further scrutiny. I mean, remember that the IRS has thousands upon thousands of tax returns, and they do statistical analysis. Mm-hmm. And if you have a number that's wildly outside the norm, they're going to ask you about it. Okay. So the number of miles related to standard mileage, and then also meals and entertainment is another one. They're looking at that just from a macro. Is this a reasonable number? I mean, if I'm officiating 4 months out of the year effectively, and I've got $50,000 in meals and entertainment, obviously
Jeff, we're big eaters. So what do you want me to say?
Exactly.
I'm an umpire.
Yeah, I mean, but that's an extreme example, but it's just one of those that, look at it from a reasonableness standpoint too, because if you fall outside of one of those ranges, it's very likely the IRS will send you a letter and ask about it.
Okay, so to kind of wrap everything together, things that we can deduct. Mm-hmm. Meals and entertainment, uniform costs, equipment costs. So I'm separating that in my mind as my O to O, a new flag, a whistle, things like that. Uniform, I'm going to calculate my pants, my hat, my shirt, my shoes if I need new shoes, things like that. Fees that we're going to pay, so our association fees and our dues and different things like that. Then any educational type of stuff, so any type of clinics, any type of subscriptions. So with NASA, that is a subscription that we have to pay, and we get the magazine, which is an awesome magazine, Referee magazine. But things like that are also deductible. Standard mileage, we're deducting. We're saying we should deduct. Do you recommend depreciation on vehicles, or would you kind of just stick with the standard mileage?
I'd stick with the standard mileage, but keep in mind, even with standard mileage, tolls are a separate item.
Okay, tolls.
So you can keep track of tolls separately. Yeah.
What about this one here? What if you donate and buy me a coffee? Go to buymeacoffee.com/Mike D the referee. Is that going to be a tax deduction for anybody that wants to buy me a coffee?
Yeah, I mean, if you have, you can have out-of-pocket expenses related to, just related to going to games. I mean, I do that with my own. I will say I'm a bit conservative, because I've never been audited by the IRS, but if I were audited, I'm pretty careful with it, because being both a CPA and an attorney and representing people before the IRS, I do know of a situation where they caught an attorney not reporting things on his own personal tax return, and let's just say they made an example of him.
Yeah, I'm sure you've seen the
under
ugly
the
side of it.
Yeah, it was under the "you knew better" standard. Yeah. So yeah, I mean, and I think the key takeaway is record keeping. If you have mileage, where did you go and why? If you have game fees, where was it? Keeping good track of where those game fees came from. And if it's meals or any kind of meals and entertainment, where, why, what was it related to? That's what the IRS wants to see.
Okay. I think I got one more question for you, and then kind of wrap it up and get us all to go back and watch a little college football too.
All right.
Way back in the day, I was a licensed real estate agent, and I knew that back then I could deduct stuff like where I'm sitting, my office, because 90% of my job as a realtor was going to be spending time on a computer and searching for homes for people, searching for comps, finding all that stuff. Not even the legwork of being out on the road, but just the in-house stuff. So
Sure.
Is there stuff like that officials for home costs type of thing? Could they declare a room if that's...
So home office deduction, while it's theoretically possible, I don't recommend.
Okay.
Primarily for officiating. Ironically, the home office deduction goes back to, I'm pretty familiar with that because it goes back to when I was in law school. Mm-hmm. It was a fairly significant issue. There were some cases that came out. Unfortunately, there's a set of rules out there now for home office deductions that are out there because back then there was a perceived abuse.
I'm sure.
Where people were being ultra aggressive, 50% of their house was home office and all of their utilities and everything else. And that was identified as an abusive area. And what does the IRS do when they identify an abusive area? Well, they, in some cases, it would be viewed as a bit of an extreme reaction to place a very restrictive set of rules. So today, the rules that you have is that if that home office, for instance, I'm sitting in my home office right now, which is a 12 by 12 room. Yep. Well, my 12 by 12 room, it has to be exclusively used as my home office, nothing else.
Okay.
And I've been through the home office audit. They will ask questions like, do you have any personal items in the room? Do you have a TV in the room? I mean, when they say it has to be exclusively for business, that's what the more restrictive rule says.
Gotcha. And yeah, I'm familiar with some people being abusive of it because I was once told by a realtor, well, I have a laptop, so I just walk around my house, so my whole house is my office. I'm like, oh, all right, so 2,400 square feet office, huh? I'm like, that's bigger than most companies that I know.
Yeah. But you see that person, you want to say thank you to them because they're the people that'll get audited. Yeah. And you look all that much more reasonable.
Yeah. True. But yeah, that's the one reason I had to ask that question is because I have heard of the abusive nature of it. And people are like, oh, well, I deducted this much off of my taxes. It saved me this much money. But I'm like, oh, okay. There's that red flag.
Yeah, and see, I don't doubt that it did save them money, and I don't. They can claim the deduction, and the rules are there. It's just if that is challenged, it's just one that I think is very hard to defend.
Yeah,
and it's also one that maybe I'm a bit too conservative on it, but to me, it's a one that's going to impeach my credibility too. And if the agent if an agent picks up the return and sees that, is that going to prompt them to go look at 3 other areas of the return? Because, well, if you're doing this here, what are you doing elsewhere?
Yeah. So,
just one that I just don't think the benefit is worth the risk, and again, it's very hard to defend under the rules as they've got them laid out there now. Now, is it impossible to claim a home office deduction? No, there are rules out there for it that say you can. It's just you have to be very particular with them.
Gotcha. Well, Jeff, I appreciate you taking the time, and I think my listeners are truly going to appreciate this session. I know it definitely helped me out personally with the season coming up. Is there any last things, any last recommendations you want to throw out there to the listeners? And once more, give a little plug to where you work and your office and whatnot.
Sure. I think really with all this, it's a matter of record keeping and just making sure. I would go back and verify. This is a good time to go back and verify those records from the past year. Check and make sure you have the revenue reported. Those 1099 reports on the personal tax returns, I do know that they match those, so you want to make sure that you've got that information reported. And as far as deductions, just have a good record of them. Have a good record of the purpose. Whether it's whatever the expense is, whether it's travel, entertainment, meals, equipment, just have a good record of, in the case of travel, what game is it related to? Where did you travel to? What day did you travel? Dates of travel. Equipment is just that it's related to officiating. You keep those records, and even if you would catch an audit with the IRS, if you put those records in front of them, I think that they're, you're going to go a long way towards showing them that you made a very strong effort to account for everything, and they'll take that into consideration.
That's great stuff. And over the next week or so, I'm definitely going to start going back and backtracking and looking at what I bought. It's the one nice thing about having online shopping these days is my emails save everything for me, and that's got the receipt right there, so I can pull up and see what I ordered, and I do have records of it. So it is something I'm going to start going back and taking a look at. Well, sure. Jeff, once again, I appreciate your time, and if people are looking to try to get in touch with you, do you have a way, or would you want them to reach out to me, and I could possibly put you in touch with them if they have any questions?
Yeah, they can reach out to you, and I'd be happy to talk with them.
Okay.
We can talk tax, or we can talk fish. We can talk football. That's my primary area.
Yeah. It's definitely something that's needed to have this conversation. But yeah, I just love talking football too. So. But once again, Jeff, I do truly appreciate you taking your time. Ladies and gents, take a look at it. Get your records in order, and start keeping some good log books for the upcoming season, so it'll make it a little bit easier on us once the tax season rolls around, so you don't have to do like I'm about to do in the next week and start scrambling and doing some mass calculations on stuff to see what I got. No. All right, Jeff, thank you once again. Happy New Year to all, and I appreciate everybody dealing with my being sick and missing an episode. Hopefully this is something that helped you all out, and take a look at the upcoming episodes. I think I got some good stuff coming up here for 2026, and we should have a fantastic another season 3 of Whistle Talk. So once again, check out all those sites, Battlefields to Ball Fields. Check those guys out. Hit me up. Take a look at the YouTube channel. I'll have some different things in there and some links in there for you too. So once again, thanks to everyone. Have a great upcoming 2026 year. Thank you, guys.